Now we're going to take a look at the basic components of the Form 1040 that individuals will use to file their tax return. So taxpayers will annually file their tax return using this Form 1040, which these forms are available in Appendix E of your textbook if you want to take a look at them, plus any necessary Schedules 1 through 6. So these Schedules 1 through 6 replace some of the line items on our old 1040. Some taxpayers will not use any schedules, but some will use 6 and others will use something in between. The forms and schedules will all follow the basic income tax formula, and one or more schedules will be used as the income tax return becomes more complex. So the first part of our income tax form will consist of our income. So the wages line is going to include any salaries, tips, commissions, bonuses, severance pay, sick pay, meals, lodging, fringe benefits, etc. items that are taxable. Employees will receive a Form W-2 indicating their total wages in Box 1 along with any other income that they need to report. Interest income is taxable unless it is exempt. Interest income is going to be reported to the taxpayer on a Form 1099 INT, and you would receive those from your bank or your investment company. Next, unemployment compensation is taxable, and that is reported to the taxpayer on Form 1099-G. The 1099-G is a 1099 that's issued by a government entity. The standard deduction is shown on line 8. For 2018, this is $12,000 for single taxpayers and $24,000 for married taxpayers, and we'll discuss the standard deduction more in Chapter 2. The total income minus the permitted deductions will equal our taxable income, which will be on line 10 of our 1040. To calculate the income tax that's due for taxable income of up to $10,000, we're going to use the tax tables that are printed in Appendix D and in the instructions to Form 1040, which is available on the IRS's website. The tax rate schedules are going to be used for higher income, and those are also printed in the textbook in Appendix F. The tax tables will calculate tax at the midpoint of the income range that's given on the table, and the tax rate schedules will calculate the tax precisely down to the dollar amount. Another tax that taxpayers will pay in 2018 is the shared responsibility payment. Taxpayers must have qualified health insurance or qualify for an exemption or pay the shared responsibility tax in 2018. The tax is going to be the greater of 2.5% of household income greater than the tax return filing threshold that's shown in your textbook on page 1-13. This threshold is also the standard deduction amount that taxpayer qualifies for, which we'll discuss more in Chapter 2. Or $695 per adult, $347.50 per child, and that's limited to $2,085 per household. This shared responsibility payment, if it is due, would be reported on line 11 of the 1040 Schedule 4 on line 61. So let's take an example of the calculation of that shared responsibility payment. In this example, we're going to take a look at our taxpayer, Donna, who is aged 27 and single. During all of 2018, she did not have qualifying health insurance, nor was she eligible for an exemption. Her household income was $65,000. So we need to calculate what amount her shared responsibility payment will be when she files her 2018 income tax return. So to go back to the information on the prior slide, her shared responsibility payment is going to be the greater of $695 per adult since she's single, filing as single, or 2.5% of her income minus the threshold. So the threshold as for a single individual will be $12,000. So you would take her income of $65,000 and subtract $12,000 and multiply that by 2.5% to get $1,325. So since the calculation is based on the greater of those two numbers, her shared responsibility payment for 2018 would be $1,325.